Thanks,
So
guys.
we've heard a lot today about this new creative economy that is rapidly emerging and the exciting opportunities that it presents. However, it is not without risk. As we saw just this month with the crash of the Terra Luna USD pegged stablecoin, participating can cause real financial harm to those involved.
On the one hand, you have an industry that is powered by smart developers, technicians, visionaries, and innovators whose background may not necessarily have been in risk management. On the other hand, we have regulators with strong backgrounds in traditional finance who are trying to make sense of this new highly technical world.
Regulation has evolved from years of tests and challenges on the existing financial ecosystem. For many of us, we don't have to go back too far to recall the recession of 2008 and its causes and why regulation became important. The same is true of the devastating events of September 2001. But many of today's new world developers aged in their early 20s today may not even have been teenagers then.
And I guess, Queenie, that then creates a new challenge. How do we bring forward our experience and learning of the old world into the new? How can we become responsible innovators so as to allow for these new technologies to flourish in a way where participants, I guess, fully understand the risks, at the same time can be protected from harm?
Then I suppose we'll be having now Malcolm Wright to guide us through what regulations and real objectives really are. What are some of the key risks that we face, and how can we all become responsible innovators to the benefit of society? Over to you, Malcolm.
Thank you very much, Queenie and Trent, and good afternoon, ladies and gentlemen. It is a real honor and pleasure to be here today. Right, just share my screen. So, where did it all begin? This is a photo taken on the 6th of May 2019 at an event I was at the United Nations offices in Vienna. It was the first meeting between the crypto industry and policymakers to discuss crypto regulation. In that month, Bitcoin was valued at $8,200 or about 10 million Korean won in today's rates. Meanwhile, FTX launched and has gone on to now be valued at $32 billion. And in the metaverse world, Decentraland was less than a year old, and Animoca Brands had recently acquired the sandbox for a blockchain-based version of the game. But it was what was taking place in this room that was so pivotal as the industry and regulators came together to discuss regulations for crypto. Although there were some jurisdictions already taking the lead for the majority of the world, the starting point only arrived in 2019. So what is it that regulators are seeking to do? Regulation is well established and has been protecting the financial system for many years, but protecting it from what? Excuse me. The regulators have three primary objectives. First, ensuring financial stability. This covers many aspects, but will usually include monetary policy, such as capital controls and interest rates, alongside prudential and financial regulation of the financial institutions covering capital requirements, market activities, illicit finance protection, and so on. Second, to ensure consumer protection against activities such as fraud and scams, ensuring technical controls to keep customer funds safe from hacks and ensuring that customers are aware of or understand the risks of what they are buying. Lastly, to ensure that the markets function well through competition and fairness. That is, can consumers get a fair deal without collusion or market dominance by one or a handful of market institutions, and further, can a jurisdiction compete on the international stage? When you look at these points, at these 3 points, you can really start to understand why regulators are interested in crypto and the emerging advancements in DeFi, DAOs, and the metaverse. But for a regulator, these areas compose substantial challenges. The matters that are currently concerning regulators can be categorized into 8 areas, which will map back to those 3 core objectives. Firstly, preventing illicit finance, such as fraud and scams, sanctions evasions, money laundering, hacks, and terrorist financing. Second, tax, collecting tax revenue on profits and gains made from metaverse or trading activities in the same way as in real life. Also ensuring that the new economy does not facilitate tax evasion. Third, protecting consumers and society from illegal gambling. Gambling activities are generally licensed for a reason, particularly when it comes to preventing player addiction and overcommitment of their money. Next, when an asset being sold or purchased is a security or not, such as fractionalized NFTs and crypto investment funds. Securities legislation has been built over a great number of years, and as a result of previous financial failures, and the same rules still apply for good reason. Then we have data privacy. None of us would like our personal data stolen or misused. In an ever-connected world, privacy remains a significant concern for misuse, whether intentional or by accident. IP rights, right click and save, has made it increasingly easy to copy works with the intent to resell and profit where the seller might not have the rights. Even considering when purchases are legitimate, what rights are given when a digital piece is purchased? What is it that you actually own? Conduct and behavior. In its simplest form, consider marketing where outsized APY claims are made about profits with no risk warnings of the downside. But this goes further to the way in which the market players have been particularly around fairness and consumer protection. And finally, risk management, where the market players adequately build risk maps to prevent intentional or accidental harm. In recent days, commentary on the Terra Luna UST collapse has focused on whether risk management controls could have saved many from losing their funds. So what is it that the industry can do? The emerging sector has unofficially had a mantra of buyer beware, with the acronym DYOR, or do your own research, becoming popular. However, this will not satisfy a regulator's objectives, and closer scrutiny will follow, particularly where the industry appears to operate without regard for basic safety controls. Regulators are concerned that users often do not have the financial or technical knowledge to understand the risks that they are taking, and as such, the regulators observe that they must intervene. However, if the industry considers its own conduct with standards, industry bodies promoting good behavior, education, and so forth, this will go a long way to providing regulators with the comfort that it considers risk appropriately. Self-regulation then leads to good regulation. This is actually the reason that Global Digital Finance was formed in the first place, to now become the world's largest industry body in this space. Building public-private partnerships between policymakers, regulators, law enforcement, and the industry can have a materially positive impact on the shape of regulations. It promotes the sharing and ideas of knowledge from which better regulation can follow. Designing platforms that protect users and promote fair play. This doesn't have to come at the expense of profits, but a mindfulness on the downsides and harm, as well as the upside and positive outcomes, will ensure that privacy by design, security by design, and fair play by design apply. And finally, involve risk and compliance early, and look for risk and compliance advisors who will be able to translate between policy and technical teams, as well as strategists focused on the prudent and sound approach who will build your business and not build a wall. So what does this all mean? Good regulation will remove the grey and build sustainable businesses for the long term. By ensuring financial stability, consumer protection and fairness, and competition building on the tools I've highlighted here, Korea will lead the way in these rapidly changing real and virtual worlds. Thank you, Queenie.
Thank you, Malcolm. So with self-regulations and good compliance and involving compliance in early will save you a lot, right? Supposedly.
That's good. Yes, very much so.
Brilliant. Okay. Upcoming next, we have Mr. Samson Lee, founder of CoinStreet and also TADS Awards. He's an STO expert, and he will tell us about securities and token assets. Over to you, Sam.
Thank you, Queenie. First of all, it's really great pleasure to be here, and thank you for the organizer for having us. I noticed I have 6 minutes today, so I try to be more precise. Today, I want to talk about the more compliance aspect of the digital asset space. So first of all, a quick introduction of QuantStreet. We are an award-winning decentralized investment banking group serving the high-end financial service, the private wealth, professional consulting firm, and digital asset sector. So we operate in a primary offering, Metaverse solution, DeFi solution, and asset management. So let's zoom out to take a bigger picture of the whole industry for the digital assets. We can, in general, now separate the digital assets into 5 buckets. I'm sure there are more, but let's look at the main category. And of course, we have the BTC by itself is the largest single digital asset. And then we have all the altcoins and DeFi, cryptocurrency or tokens. And of course, the stable coin and this very interesting NFT that we talk a lot today. And also the security token as well. So here's a latest market data that I captured from CoinMarketCap yesterday. It's changing every day, but as of yesterday, for example, the market cap for Bitcoin is 552 B. It considered around 45% of the total market. And altcoins or the DeFi coins, 493. So all the Ethereum, SOL, everything is in here, right? Composed of 41%. And the stable coin, 160 billion, composed of 13%. So this involves all the USDT, USDC, Euro, stable coin, everything. And the NFT is 11 billion, is around 1% of the total market. And security tokens is very small now. We believe is in the infancy stage, but of course, with a bright future, is around $1 billion market cap. So this is a quick composition by percentage in a pie chart. So you can see visually, Bitcoin is the biggest, and then DeFi, altcoin, and stable coin, right? NFT is still very small, and that's still quite minimal. So on the other aspect, we also look at the daily trading volume. For example, BTC 31B. The interesting thing is we also, okay, so that's the total daily percentage, all right? So altcoin 31B, 35B, stablecoin 70B, NFT 14B. But on another perspective, we take the daily trading volume and divide it by the market cap to find out what we call the turnover rate, right? Then we find out like how fast a digital asset turn itself on a daily basis. So if you look at BTC, for example, it is transacting like around 6% of the total BTC transact on a daily basis. Altcoin DeFi, similar, a little bit more, 7%, and stablecoin a lot more, right? Because we know we use stablecoin for many BTC trading and altcoin trading as well. So 44%. But what's interesting is if you look at NFT, it's 130% of its own market cap numbers on a daily basis. So for this aspect, we put in, a perspective of, the higher turnover rate digital asset might bring a higher risk, right? So from this perspective, NFT is the highest risk with the stable coin as second, altcoin the third, and BTC, and then security token the last, because it's really minimal, so it didn't really affect the market much at this point. So from another aspect on the regulatory framework, we first put back the risk factor we just arrived from the previous slide. And then we look at it in general, right? Because of course, every country is very different country by country in the regulatory framework. But in general, we can say, I hope you all agree with me, the regulation framework or intensity for security token is the highest because it's falling within the jurisdiction of the traditional regulators, right? The security commissions and SEC in US, for example, and they are mostly using the traditional security laws to regulate STO, right? So it is very highly regulated. And secondly, I put BTC because now BTC receives, first of all, a lot of attention. And there's also a lot of derivative product being derived in the BTC, like ETF, BTC funds. So there are a lot of attention from the regulators around the BTC space. And then, given recent incident of stablecoin, we also got a lot of attention for stablecoin. For example, in countries like Singapore, they actually have this new law called the Payment Token Act. So they treat stablecoin as a payment coin. And then Lcoin at last. Really sorry, the phone. Yeah. Okay. And then on NFT is really not much regulation exists as of this point. So if we compare these two perspectives, we might say, for example, in the security token space, it might be a little bit over-regulated, right? On the other hand, on the BTC, okay, it have heavy regulation, but it's not as much. Stablecoin, question mark, right? Because in recent incident, there might be a regulator need to take a second look of what to do. And Lcoin, not too much regulation because of a lot of the DeFi activities, right? Decentralized operation. So is it appropriate? Or, I don't know, right? I'm not trying to come to a conclusion here. So we try to then open up for discussion later on. But for NFT, it's very interesting. It's the opposite perspective from security tokens. As you see in our previous slides, it's the highest risk, but the less regulation. So is it under-regulated? I don't know. So hopefully this can lead us to the open panel discussion next. Thank you.
Thank you very much, Samson. Now over to you, Trent, to moderate the panel for the panel discussion.
Great, thank you, team. And I guess the first question would be, the question of regulation is important for all countries around the world, and certainly Korea is looking closely at the situation. However, the recent meltdown of Luna and Terra has intensified the spotlight on regulation. What do you think will be the impact of this financial challenge?
Okay, so she'll take that one. Thank you. Thank you, Trent. I think we're going to see there's going to be more attention paid to consumer protection and product suitability. Now, that's not to say everybody shouldn't have the right to participate, but there perhaps needs to be a benchmark or an understanding or proof that somebody understands the risk that involves participating in a particular project or token. We may see that algorithmic stablecoins may be treated differently from, say, asset-backed stablecoins, or the asset-backed stablecoins have to have a certain proportion of freely available cash to prevent potential, effectively, bank run. Or we may find that algorithmic stablecoins are just considered that they're beyond the risk unless they can be properly controlled. We may also see the acceleration of regulatory frameworks. So we're seeing, for example, in Korea recently, the Financial Action Task Force, the AML watchdog, the regulation that was, or the guidance that was given to all countries, Korea has implemented that and was one of the first jurisdictions to do so. So we may see other countries now following rapidly. And I think that lastly, we might see the evolution of new regulatory frameworks that are more suitable to this new landscape, rather than just reliance on the old ones and trying to make them work to fit.
Yeah, I just adding to that. I think the recent incident really caused attention or a second look from people. Like now, um, the crypto world is not isolated. Is a lot of correlation related to the mainstream market, right? A lot of hedge funds, traditional hedge funds, actually participating. So these all become part of the bigger financial ecosystem. Um, and Previously, a lot of the stable coin from regulatory point of view is being treated as altcoin or in a cryptocurrency. So maybe, as Malcolm said, I agree, maybe we need to look at it separately, profit out. Um, as I mentioned earlier, some of the country actually have a payment token act treating stablecoin as payment tokens. So that might be interesting perspective, and also it might lead to more thinking towards the CBDC.
Very interesting. Thank you for sharing. So it seems like to me the whole point of the introduction of BTC and the decentralized blockchain is to avoid burdensome regulation, costly intermediaries, not always acting in the best interest of us all, and to create a free-willing economy that allows people to work directly together through smart contracts. So do we really need a heavy regulation layer on top of this? So far, heavy regulation has not stopped the scandals and meltdown in the TradeFi world.
I think that is true, Queenie. We have to look at where regulation has come from. And we could look at, for example, as you mentioned in the introduction, we can look at 9/11, we can look at 2008, both of which introduced new sets of regulations. So in 9/11's case, we had the Patriot Act, we had new regulation around anti-money laundering and terrorist financing to prevent the flow of funds to be able to carry out such attacks. And then in 2008, we had the global financial crisis, and we had a lot of regulation introduced at that point to really be able to protect the system from another global meltdown as we had before. The aim shouldn't be to avoid regulation completely, but to make sure that regulation is efficient and appropriate. For example, in traditional finance, there's this concept of clearinghouses for financial institutions, and those clearinghouses are part of the legal framework. So in Europe, for example, you have Euroclear, where all financial transactions settle through. But that's actually to solve a coordination problem. In smart contracts, you can actually do this in a way that is trustless, it is automated, and that means that actually there's no need for that intermediary or that specific piece of legislation.
Thank you for sharing, Malcolm. What are your thoughts, Sam?
Yeah, adding to that, I think that's a very interesting perspective about decentralization. If we look at the origination of that, with the Bitcoin white paper, the decentralization they're talking about is really lack of government intervention, right? So that there's no government keep printing unlimited money. The system settle itself and able to handle transaction between different parties without even know each other. That's great. But when it comes to regulation, I think one aspect of regulation is investor protection. So if any product become an investment product and taking people money, right? There's responsibility from the government and the regulator to protect the investor, right? So we have to keep the balance. And also this world, although in the future we may all living in the metaverse, but in the real world, it's all sovereignty based. So we all separate into different countries. Every country have their own sovereignty and will have their own regulation, and they have the responsibility to protect everyone within the country. So we go to US, we have to play by the SEC rules. We're in Hong Kong, we play by the SFC rules. So I guess the point is whether the line is being drawn any particular, whether currency, cryptocurrency, a coin, a tokens, or any digital asset, how they see it is an investment product, right? Or you know, touching which segment of the market, right? Because now some country they only restricted professional investor to buy Bitcoin. Like they ban all the retail investor. People actually have to prove they are rich in order to buy Bitcoin. So that is kind of a dilemma, like, you know, in terms of the financial inclusion. But yeah, unfortunately, like we are living in a hybrid world where we try to build a lot of things in a decentralized way and the metaverse, but physically in the real world, still a sovereignty-based human society.
Mm. And Malcolm, I guess given the borderless nature of the crypto world, would you advocate for a global regulatory regime, or is that simply too hard and should be more in the regional jurisdictions?
I think right now it appears too hard. So if you looked at the anti-money laundering standards produced by the Financial Action Task Force that I mentioned earlier, they were implemented, or they started coming to force in 2019, about a month after that photograph I showed you earlier was taken. That was at a global level, but those recommendations have still not been implemented into law in every single jurisdiction. Korea was one of the first, but there's still plenty of places that have not yet implemented. But I am a strong advocate of regulatory interoperability, where similar concepts and licenses can actually be transported across borders. So I think that the direction we are moving in, where we have this borderless value transfer or NFTs or metaverse, everything there doesn't necessarily revolve around borders. So it does mean that we may actually need to move towards some sort of regulatory framework that can operate across borders to properly manage the risks and also really to promote global responsible innovation.
Okay, great, thank you. And Sam, any comments on that as well? And we will just wrap it up after this answer as well.
Yeah, I think it is a great idea to have global regulation, but realistically, I'm sure it's very hard, right? Because as mentioned, we're in sovereignty based. Every country have their own thinking, and this will be a challenge for security tokens, right? Because one of the earlier chart we showed security tokens very small. I think one of the reasons is this, because in order to do a global distribution of the security tokens, we really have to go through all the security laws on every country, which is very hard. But on the other hand, if we do things more in the DeFi way, you know, in the cryptocurrency, if we get around the security regulations, it's very doable. So I think we definitely heading out into a new direction of a hybrid kind of model, right? I don't think doing our digital asset with the traditional security law framework is workable. It's a completely different product. We're not talking about IPO here, right? But it takes time, you know, to find this best middle ground. Yeah, but I'm optimistic on the future.
Thank you for that, and thank you, Malcolm and Sam, for your valuable insights into regulation within the space. There is always a balance when looking at innovation and regulation. On the one hand, if we had regulated Bitcoin straight out the gate, then would we have had the Bitcoin and blockchain revolution that took the world by storm over the last decade? With blockchain, crypto, metaverse, and NFT revolution well underway, I guess the scene is set for a regulatory approach that allows for the continued innovation of the space to take place, whilst providing an overarching governance and regulatory framework to be able to operate within. And Queenie, any thoughts there from yourself?
It was very informative. I'm gonna ask Sophia. Sophia, what are your thoughts on regulations and reality panel?
It was such an insight into regulation versus reality. I cannot wait to see what the future holds. Anyway, that is the end of our program today. We hope you enjoyed this session. Any last words from you, Trent and Queenie?
I have some words that I'd like to say. Firstly, it's been an absolute pleasure to be here in a virtual sense to connect with you all today on these very important topics and concepts that are changing the world with every breath we take. The world is evolving and changing in a dynamic manner. Future generations will see what we are dreaming and aiming to build today as the cornerstone of the reality that they live in on a day-to-day basis. The metaverse is building out. Billions of dollars are being invested into the space. Large enterprises are assessing their Web3, NFT, and metaverse strategies to better engage with their customers and communities. You've got governments like South Korea that are building out their own metaverse, the expanded virtual world, and as a consequence, I guess incentivizing collaboration between industry, government, and regulators. Wherever you have these new frontiers being built out, you will always have the visionaries, the explorers, the builders and architects like the speakers today that help pave the pathways for the world to forge their journey on. Thank you to our speakers, presenters, and panelists. Thank you for your time, energy, and expertise. And thank you to those of you in South Korea, physically and virtually. Hopefully, you all have been able to learn something today and are able to take something of value away with you.
Thank you so much, Trent.
With the
Queenie,
Generation
so
Alpha being the upcoming. Oh, sorry, was someone talking?
This is Tiger.
Oh,
Can you
hello,
see me?
Tiger.
Yeah. Thank you very much. And Trent and Queenie, thank you very much for this wonderful speech and discussion for this forum. Thank you very much.
Thank you, Tiger.
Thank you.
Thank you, Tiger. 감사합니다.
Thank you, everyone. Thank you, Trent. Thank you, Queenie.
Thank you.
Thank you.